it also came out with disappointing margins and weaker than expected profit numbers. Ekta Batra is here with the analysis. Ekta, disappointing quarter as well. Tell us what you made of that hiving of the API division.
Well, yes, it was a disappointing quarter for Stride Shasun this time round. The numbers are not comparable year-on-year or Q-on-Q because of the change in accounting standards, plus the merger of Shasun as well as the acquisition that they did in Australia. But overall revenue is just about came in at around 875 odd crores. The street, there were some estimates which were around 900 crores plus. EBITDA at around 133 odd crores, which resulted in margins of around 15 odd % versus expectations of margins of around 18 odd % this quarter, and a profit which came in at around 26 odd crores, albeit because of R&D costs which were up around at around 22.8 odd crores, net interest costs which were at around 39 odd crores, and depreciation costs which had risen to around close to 50 crores because of the acquisitions undertaken. Separately, besides all of the geographies which in fact grew, for example, the regulated markets up 100%, emerging markets up around 65 odd %, one segment, which is the PSCI segment, declined around 11 odd % year-on-year. In fact, talking about the API business, the management has decided to hive off the API business. They have said that it requires a different level of focus and hence the decision to do so.
All right, thanks so much for that. So tough day for that particular stock today. Now, it's been a turbulent quarter for the aviation sector on the back of competition, pressure on load factors, cost escalation, as well as a rise in ATF prices. Despite this, many brokerage houses have a buy call on some of the aviation stocks. Sonia Shnoy is here to tell us why. Sonia.
Well, despite weak earnings that the aviation sector had this quarter, a lot of brokerages believe that the worst is in the price. Citi today upgraded Interglobe Aviation to a buy. In fact, they have a target price which is almost 40% higher than the current market price. They have a target price of 1100. They say that, yes, yields are under pressure. Yes, there is a lot of competitive pressure. Domestic fares are falling. But all of that seems to be in the price now. Interglobe Aviation's results have been factored into the stock, and this is an attractive entry point to get into Interglobe Aviation. They also say that at 7.5 times EV to EBITDA, the stock is trading at par with a lot of global low-cost carriers. Now, that's on Interglobe. On Jet Airways, too, we've seen positive brokerage reports despite weak earnings coming in. So Edelweiss has a buy on Jet Airways, although they've revised the target price a bit lower to 610, but it's still above the current market price of 550. They make the same argument. They say that the recent correction has factored in a lot of the challenges. The stock has factored in a higher than expected fall in yields. But the positive is that the company is focusing on improving its balance sheet. In fact, in the quarter gone by, they managed to reduce their debt as well by almost 350 crores. So most brokerages believe that there is opportunity in this adversity.
All right. Thank you very much for that neat summary, Sonia. And with that, we wind down on markets today.
Thank you for watching and have a great evening.